Trading Lessons from the Art of War. The Art of War was written by Sun Tzu in the 5th century BC. It is considered by many to be the Bible of warfare. Its tactics and strategies have been studied by generals for years, and its principles are still considered a foundation of military strategy. Let's see how these timeless principles can also be applied to trading. Victorious warriors win first and then go to war, while defeated warriors go to war first and then seek to win. In war and in trading, the path to victory lays in preparation. The battle is won before it is even fought. For traders, this means having a plan and having the discipline to follow it. Some things to consider are: what type of stocks are you looking to buy? What will be your entry signal? How many shares will you buy? How will you know when to cut your loss? How will you know when to sell your winners? By knowing the answers to these questions before you even buy a stock, you will be prepared for the trading day. Just as the victorious warrior wins before the battle is fought, the successful trader wins before the trade is even entered. Having a plan takes the stress out of trading and makes the trading day a simple process of just following signals. You never want to be making decisions on the fly or being caught trying to come up with a plan on the spot. In the midst of chaos, there is also opportunity. Market psychology is one of the most fascinating aspects of trading. What's really ironic is that the greatest opportunities in the market usually come at times when everyone is bearish, or, as Baron Rothschild stated, when there's blood in the streets. When the news is ultra bearish and fear runs rampant, that's usually the time when the market is nearing a bottom. Take 2020 as an example. Despite COVID-19, there was a raging bull market from April 2020 into early 2021. Despite all the gloom and doom, those who were prepared to act were rewarded with a literal fortune. The next time the market is in chaos, remember that somewhere down the line there will be massive opportunity. He will win who knows when to fight and when not to fight. This one is absolutely crucial to trading. Most new traders just can't sit tight. They have to constantly be making some sort of trade. But here's the deal though. Is all that action really beneficial? Like Sun Tzu states, it's best to know when not to fight. Just as it would be unwise for a general to attack an army of superior size, it's best to avoid trading in whipsaw environments or to buy into strong downtrends. The overall conditions are just not right. Have the patience to wait for the best opportunities. Who wishes to fight must first count the cost. The successful trader must always consider the risks involved in any trade. While it is exciting to see the potential reward, there is inherent danger in every trade. Before you place a trade, think about what can go wrong and make a plan around it. For instance, use a stop loss to control your risk and position size you are comfortable with so you have some sort of sense of what you're going to lose if things go wrong. Know your enemy and know yourself, and you can fight 100 battles without disaster. This lesson has two aspects that are both equally important. When looking at the market, you must have an understanding of what type of conditions you are working with. Is it an uptrending or downtrending market? A bull market or a bear market? Where are we in the overall cycle? This is a complex topic in and of itself. So check out my video on bull and bear markets to take a closer look at the overall market cycle. Knowing yourself is equally as important as knowing the market. Everyone has their flaws, and you can bet trading will quickly expose them. For instance, some people are really nervous. These people will have an extremely difficult time holding a stock through any sort of normal action. Conversely, some people treat the market like a casino. In an effort to add a little excitement to their lives, they will soon find themselves with the type of return most players get when they leave the casino at the end of the night. The key is to keep a journal of your trades and make notes of your strengths and weaknesses. Maybe you trade too much, or are too aggressive, or maybe you just can't sit tight. Whatever it is for you, find out what you need to work on and then make the steps to take the proper actions. Once you know yourself, you will be closer to getting the type of results you are seeking. The worst calamities that befall an army arise from hesitation. Many traders fall into this trap. They just can't make a decision. Should I buy or should I sell? If I sell, will it go up without me? If I buy, will I lose money? This is the type of indecision and hesitation that devastates a trader, both financially and mentally. But the solution is to have a sound plan and the discipline to follow it. I personally do all of my research during the weekend, when the market is closed. It's much easier that way, without the noise and distraction of the market. With a plan in place, the actual trading week is really quite boring for me. By Sunday night, I've already decided when I will initiate new positions or when I will sell the ones I already own. Therefore, the week is really just a matter of executing my plan. I think it is fair to say that we have all suffered from some sort of hesitation at some point in our career. But it most likely stems from a lack of experience and a lack of planning. With a detailed trading plan, you will find yourself ready for each trading day and not at risk of befalling any type of calamity. Whether in an advantageous position or a disadvantageous one, the opposite state should be always present to your mind. It's so easy to find yourself at emotional extremes when trading. Everyone feels like a genius when they own a big winning stock, and later like a fool when they're in the midst of a large drawdown. The truth is, you always have to be prepared for the opposite side of the trade. When I'm in a big winning position, I start to think about what can go wrong. For instance, is this stock too extended? Is it due for a reaction? Where are we in the overall move? Conversely, in a deep correction, I start looking for potential buying opportunities rather than giving up and throwing in the towel. In war and in trading, things can change very quickly, so always be prepared for the opposite state of affairs. By reinforcing every part, he weakens every part. It's simply impossible to be good at everything. Just as not every part of a line can be reinforced, it's just not feasible to try to master every aspect of trading. I personally do very little shorting. My goal is to just focus on buying stocks and to wait for low risk, high reward entries. When those are not around, I'm just content to wait in cash. If I tried to reinforce every aspect of trading by going long one day, short the next, running iron condors the next day, it would be too much to handle. I would weaken my overall return. Likewise, it's just not possible to trade every single stock. And the more stocks you own, the more likely you are to have an account that simply mirrors the returns of the S&P 500. Make a commitment to stay focused. Align your trading to a specific process and keep your watch list to only the leading stocks. Hence, the skillful fighter puts himself into a position which makes defeat impossible and does not miss the moment for defeating the enemy. The goal of both war and trading is to make defeat impossible. But how can a trader do this? The answer is quite simple. You want to put yourself mathematically in a position where it is virtually impossible to lose all your money. How is this done? By risking only 1% of your account on any given trade. By doing this, you set yourself into a position where you could be wrong many times in a row and still not get yourself into too much trouble. Compare that with the average person who puts their entire account into one stock and sticks with it no matter what. What you really need to do is set up your trading in such a way that the market can never annihilate you. That is, that it can never wipe out your entire account. The way to do this is by using proper position sizing combined with a stop loss to limit your risk on each trade. This will allow you to cut off the downside of a trade if it starts to run against you and thus protect your account from defeat. To download a free spreadsheet to help you manage your risk on each trade, visit my website. The quality of decision is like the well-timed swoop of a falcon which enables it to strike and destroy its victim. Watching animals hunt can be truly fascinating. Great hunters such as falcons are cunning, fierce, and above all patient. They wait for the perfect moment and then, without any hesitation, swoop in to strike their prey. This is exactly how I think about my trading. I'm not just going to go in and buy any stock just because I want to. I'm looking for the best setups, where the odds are in my favor, where I have very little risk and the potential for a very large reward. Just as the falcon will wait for just the right moment, we too must be patient for the best setups. And then, when the moment is just right, be ready to move in with force and conviction to capture what is ours.